Did you see how much was it Amazon? Was it Amazon paid for the Lord of the Rings series?
No, but they probably played a lot.
It was like 2.5 times what anyone was expecting. It was $100 million for the series. I think the best offer out there from Netflix was gonna be like 40 billion or no, billion.
There's no way it was a B, dude.
Amazon bought the television rights for Lord of the Rings for $250 million, making a 5-season production commitment worth at least $1 billion. That's what they be, brother.
You said 100 billion, dude. That is different than 1 billion. Oh, I was just thinking, I heard a stat that I didn't believe that said that Saudi Aramco's revenue is bigger than Amazon, Apple, Google, and Microsoft's all together.
Probably 100 billion.
Nice. Full circle. Well done. Everyone loves a good callback. Nice. All right, good. Yeah, let's get
I
this
rounded.
going.
I'm rounding everything to the nearest 100 billion.
That's good. That's safe, dude. That's safe.
Your net worth, I bet, is around 100 billion.
Yeah, plus or minus.
Welcome to another episode of Talk Your Chart. Brett Horowitz here with Marcos Segrera. So Marcos, I want you to think back to 2020, a long time ago, the beginning of COVID. I'm going to start with a story because I think this story is really on point to what I want to talk about today. So both of us were at home then. Both of us had our Murphy beds in the background. We were doing Talk Your Chart from our houses. And my wife walked into the room while I was working and said, "Oh my gosh, big alert. I have a virus in my computer, but don't worry. Microsoft is handling it and they're going to help me take it off." I immediately thought, this sounds really suspect. So I went back to the office with her. We called the Microsoft guy.
Oof.
And he said, "Listen, I need you to not get on your cell phones, not make any phone calls, not go into bank accounts, don't do anything because there's a virus." I said, "But I don't understand. What does a virus have to do with my cell phone? Why can't I make any phone calls? What does that have to do with my bank accounts? Because on my bank accounts, like we're talking about her computer." So immediately things did not start to add up. We hung up. He had already gotten on her computer and we're starting to poke around. He had done the screen sharing where he logs in. So we got it stopped. We changed passwords right away. But I think in that vein, that was our first almost hit of, having somebody get in and get information from us. And as we go through the weeks here, it seems like every single week we get a notice from a client who's been hacked in some way.
Did that guy get nothing from you and he was on your computer?
He was on it for maybe a minute and he was just looking around folders. So I asked other people, is there anything that he could have gotten in that minute? And they said, probably not. He was just looking around to see what was available before he started to get access to things.
That's crazy. Did he call her initially?
Well, so to finish the story, she was on the computer. She went to download something. A little pop-up came onto the screen and it said, "You have a virus, call this number. Microsoft can help you take it off." Well, that was the actual virus. It wasn't Microsoft. It was somebody who pretended to be Microsoft who was then going to go through a computer and get information.
Yep.
So, we all we have monthly obligations here in the office to go through training to understand what could be phishing, what hackers do to try to get information. While it's really boring and it's the same thing every week, a lot of it, to me, it's very helpful. But I think the weak part of our relationships and for a lot of clients is if you're not used to looking at this, if you're not used to being on alert, it's very easy to get caught. Weekly clients are having it. Their emails are getting hacked. Their Schwab accounts are getting hacked, credit cards. I've had somebody else who got caught with this Microsoft hack. And it's out there. There's a list here of different crimes. And to me, they all have different breaches attached to them as to where they start gathering information.
Yeah.
But a lot of them lead to money, right? That's what someone's after. They're after your money.
What is smishing? This is like a family-friendly video thing. Is smishing, what is that?
So smishing is trying to get data from you through text message, SMS, text messages. So you get them all the time saying, hey, your social security's been hacked. Call this number. Or
Yeah.
hey, the IRS has a problem with something. I need you to click on this link.
I get a lot of that. I get a lot of text messages that are unsolicited and I hate.
So
Um,
I think some of them are pretty easy, but I wanted to spend a few minutes talking about this as sort of a public announcement to help our clients, things that they can do to avoid, things that they can look for, and things that we've learned over the last few months of going through this training.
all right, good. I'll make sure my wife watches this episode.
So I think first things first, what we've learned is that anything that is like you said, unsolicited, anything that you do not expect, anything where it's asking you to take action, usually there's either a misspelling in it, usually there's something about a username and password need to be updated, or even more importantly, there's something that's asking you to do something urgently. Your Amazon's gonna be cut off if you do not change this password. We can't get access to your IRS refund until you access this.
So you're right. We have all those monthly requirements to do the data security training. The most helpful thing that I've gotten well, number one, the consistent reminder, right? That it's helpful to constantly have it in your face. But I just generally, as a rule, I don't respond to anything inbound if it isn't expected.
Right.
At all. I completely ignore everything that is inbound unsolicited, no matter what. And
exactly.
Maybe one time it was a real thing. Because when I'm saying I blindly just nope, not happening, that's literally my rule, just to try to avoid everything. Number two, I was the bad password person until I wasn't, meaning same password across everything. And it was, you'd probably guess my password within 20 tries, right? So forget about hackers. One of the things that I just never appreciated was the whole passphrase instead of a password. So instead of using a word, use a phrase that you know, or this is what I did, get that phrase and then use the first letters in all of the words of that phrase, and then throw in some of the symbols and numbers. That's been very helpful to me.
Yeah, I've now resorted to using LastPass, which is a password reminder system where it stores everything for you, and it can then make up 20 or 30 digit passwords that are totally random. And so whenever you go on a browser, your phone automatically fills them in for you. But like you, I don't ever open any attachments from a client that I'm not expecting. So if someone sends a story or a link and there's nothing in there that makes it seem like it's them, and if you hover over the email from address, oftentimes it'll tell you also if it's from them or not.
Yeah.
I'll just ask the client, call to make sure it's them.
Yeah, absolutely. Do you remember the one thing I always think about now? Do you remember when USBs were the thing to have? That is, I would plug, someone would give me a USB and that thing was going to my computer no matter what, because of course it's a USB. I think of that now and I'm like, man, that seems so unsafe to just have USBs floating around and all that. So it quickly became a thing and then just as quickly became a thing of the past.
Right. Yeah, that's super dangerous. And if I think about investments, if I think about passwords I have for my bank and for my brokerage accounts, things like that, as much as possible, two-factor authentication helps out. Even the Schwabs and the Fidelities have this 6-digit code that they have to send you to be able to get in. Sometimes they can even use your voice as a password for further protection. Because the reality is, in those places, money's gone and it's your obligation to get it back, right? It's different than a credit card, which we can dispute it and nothing's gone. It's annoying, but at least you can get a new card if something happens.
Yeah, 100%. I think that's also why, that's why we have people in the middle. If you look at all the hacks that have happened recently around digital assets, there's no recourse whatsoever at all.
I mean, it's like a debit card. That was the old debit card rule. Never use your debit card because debit card, the money comes out first, and then you've got to try to claw to get it back.
All right, good. PSA to start. Good take, Brett. Good take. Different path. I will bring it back to point and bring it home with a little bit of economic stuff, specifically surrounding a real estate market. The real estate market has gone bananas over the last couple of years because of the whole COVID. They pulled forward demand for housing, all this type of stuff. Interest rates were as low as ever. you also are monitoring housing because, as Jerome Powell told us this past Friday, they want to see inflation come down before they stop putting pressure on the economy through their rising rate policy. Meaning they need blood on the street, and that a part of that is going to be softness in the housing market. They're going to want to see it, and they're starting to get it. So my chart here is looking at US existing home sales that are down 20% year over year, which makes sense just because they were coming off such a high number, you'd expect some softness. But now with interest rates going up as quickly and as much as they have, that puts additional pressure on homes changing houses in two ways. Go ahead.
Oh, I was going to say counterpoint though to that would be when I talk to clients who are selling a home, in some cases they're selling home and there's no other homes for sale in their entire neighborhood, right?
Yes.
I mean, and for the fact that so many people are buying homes with cash, I'm surprised that this number has gone down as fast as it has. I get it because of mortgages, but when you've only got one home in the neighborhood to sell, you would think that that home would still, command a high price and that you still have people putting it out there because you don't have any other competition.
Well, yeah, I don't disagree with that. And I think that's part of the conversation. To your point, cash buyers, they don't care as much about prevailing interest rates, but when the majority of people are not cash buyers, and when you're looking at national home sales, you're not just talking about the rich people coming to Miami that we see all the time, picking up houses for 20, 30, 40, $50 million in cash. But a lot of times those buyers are still refinancing on the back end, right? They're not just going to tie up that much liquidity in a home. That doesn't make sense. So even for them, there's a consideration to, wait a second, where am I right now? And they're sitting on a mortgage or a property loan that is under 5%. Under 4%. Check this out. There's another chart that I didn't share. Just around 75% of existing home mortgages are under 4%. So if I'm a seller and I got to go move now, wait a second, I'm going to get a mortgage at what price? And the price has still not come down as much as what I'd like. So my taxes and my insurance, it becomes this hassle, which now comes to your point. Supply comes down, but that helps prop up prices because supply is down again. So
yeah, but come on, look, let's go back 10 years. 10 years ago, you're telling me you get a mortgage for 5.5%. You say, this is fantastic. Like, I understand it's higher than what it was and you're locked into a low rate.
Bias, Brett. No, it's all a relative game. Are you kidding me? They're not saying, oh, but on the bright side, think about what the 30-year mortgage was in the year 2000. That's not how this works.
They should be, because you're not going to sit in your home just because you have a low mortgage if the home doesn't make sense.
Sure, dude. But most I have to move decisions are not, if we don't move, something bad's going to happen. Most of them are on the margin. You can move, but here's what also happens. You don't move, but you know what you do? You redo your kitchen.
Look, people are going to do that, but over the years, as we move forward with interest rates now getting to the more 5-6% range, you're going to have people who just have to move because of work or because of family or because whatever the case may be. We're downsizing it. So you're going to have more and more people raising that average from under 4 to now a higher number. And something's going to be much more reasonable to then say, okay, I'm going to move because of this.
Yeah, I don't disagree with that, but that's kind of this longer term move. Short term, it makes sense that people are going to sit on their hands and redo their kitchen instead of doubling or tripling their mortgage payment. The housing affordability index, which is another great chart, is still historically terrible. So if you're sitting in a house, and Schaefer and I are kind of looking at this now also, whereas we were on kind of a 3-year timeline starting last year. So that would be like 2024, we'd kind of make the next big home purchase. We're kind of like, you know what? If we just redid our kitchen, we could be here even longer. So
yeah, if you're a buyer, it is not looking good out there. I mean, you're talking about no one selling and having to come up with the higher rates, and the fact they're not building enough homes, as we talked about before. Like, all of this is just yeesh.
And then here's what doesn't help. So here, the rest of the housing story is, so what about housing starts? Housing starts hit a 17-month low in July, down 8% year over year. That obviously does not help supply on the other end, which basically saying home builders are saying, what does the environment look like over the next 12 to 36 months? It looks more negative than it looks positive, which is reflected in this US housing market index, which is just home builder confidence. So 50, you know, the PMIs that measure at 50 as average. So this housing market index is now trading below 50 for the first time since May of 2020,
Well,
which basically
it
means,
needed to.
yeah, which again, but it makes sense, but it's spinning this narrative of builders view conditions as poor more than good.
Well,
Okay.
what's likely to happen is going to go flip the opposite way. Like you had a point where you had supply was like a week of supply because everybody was gobbling homes so fast before they even come up market, right? If you didn't know something was a pop-up listing before everybody else did, you were in trouble trying to get that house without going over and above the asking price. So it feels like now you fast forward a year or two, and you're probably going to have the opposite. You're going to have too much supply because no one's going to want to move and rates are going up, and you're going to get to this point where it'll be the opposite of where it was.
Yes, and there's only two ways to fix the unaffordable housing problem, and that's rates drop, values drop, or I guess the third, a combination of those two things. That's what's going to happen.
Well,
And
we
it
know
starts with sales first, and then it's prices. So why do I bring this up at all? Because hopefully that's some of the pain that Jerome wants to see, so he can stop scaring the markets with super duper duper hawkish interest rate policy.
Well, we know that he's going to keep raising rates into next year. I mean, that's pretty much clear. Those rates directly affect the mortgage rates that are out there. So those will keep going up. We're hoping that they level off at some point, and that the market kind of says that, okay, 5.5 or 6% is the top. Because once you get beyond above that, now you're talking about a huge differential in payments.
Yeah, it is.
So home prices probably need to come down. It's probably good for the economy. It's good for everybody as a whole. Forgetting the fact that you want your home to keep going up forever, but it's just not sustainable and it's not good for the economy as a whole.
Wait, so let's wrap it. Last thing, quick prediction, because we're so good at those, and I know you love making predictions. Where do you think the Fed funds rate tops out before they start cutting rates? The market assumes it's going to be a 3.5% high on the Fed funds rate.
I will take the over.
So you're taking the over?
But I will say no inflation, no recession next year. 2 points of prediction.
No recession in 23 and over 3.5.
As the high. Yep.
I know. I want to take over 3.5 also, but
Okay.
now we have to. I guess we'll have to wait for next episode to figure out where we lie. Okay.
You said recession next year, so that's the difference. We'll put it on the calendar.
That's true. All right, BH.
Have a good one, Marcos.
Till next time.
Bye.